Okay, welcome back, friends. Now this is a continuation video on drawn liquidity, which I just posted previously. So if you've not understood the first concept, the concept of drawn liquidity, go back and watch it, then come to this video to continue, see more examples on how you can spot on drawn liquidity. All right, so let's get straight to it. Okay, so this is Euro AUD daily time frame, and in the daily time frame, as you can see, I've marked out key levels here that you can find. So doing this now, let me just explain now. This area is our long-term draw liquidity. This highest zone is our long-term drawn liquidity. And then this low is our short-term drawn liquidity. This low, okay, is our short-term drawn liquidity. But then before then, there are internal structures that happened here. So I'll basically be going down to 4 hour time frame in order to target it. Starting with this now, you can see there was a sweep here, but that's notwithstanding. Let's skip this place now. Going down to 4 hour time frame. Now zoom in. Okay. All right, so this is first. Remember I said that drawn liquidity basically occurs on key levels. Yeah, key levels. After you've identified your structure, it can help you find out where to take your trades and so on and so on. So the first drawn liquidity I will see here that personally, if I spot, I'll take as a trade is this. There was this last low, okay. A market sweeps it, basically creating for us our short-term drawn liquidity. Basically creating for us our short-term drawn liquidity. You know, it's a sell actually, then a sweep, a continuation, creating a doji candle, and then boom, there was an expansion. There was an expansion creating these highs, and after this high was created, market came back down, continued in that particular direction. So this is one example, drawn liquidity. If you look at, I think this should be in type 1 drawn liquidity. That's a bullish movement drawn liquidity. That's bearish to bullish movement drawn liquidity. And we'll have our second one, which happened at this zone. Okay, yes, at this zone here. This is the most immediate, and this is the one you can actually take as an entry as it's forming. So we have the pull, we have the last bearish candle, and then we have a doji candle that basically swept this zone and also this zone. So even if it's liquidity sweep that you're trading, you can actually still catch an entry from here. And after the sweep happened, you can see that there was an immediate bearish bullish market closed above this high, and now there is a retracement to take an entry from a particular order block. And if you check, if you study momentum, if you've viewed the video on momentum or you know about momentum, you can see the momentum of these candles are getting smaller, are getting lesser. Now when the momentum of a candle reduces, it basically means that yes, market is getting to a key level where its targets taps into and an immediate move, an immediate expansion to the upside. So firstly, we've gotten our order flow, which is this is an uptrend movement. We've gotten our previous change or previous drawn liquidity where the market changed direction. And now we are seeing a continuation at this particular point. At this area now where there was a sweep, a retracement, a continuation, and then a retracement into these zones continue to the upside. So if I'm taking an entry from here, I'll be targeting to take, okay, let's say I'll be targeting to take this low, target from these lows, this place is this candle swept, target from here, and then wait for the 50% actually, because if I'm going to refine this entry, instead I take this entry from the 50% of this other block, or I place my entry directly at the stop loss, so that when people are being swept, I am being triggered. So this is exactly what I would do if it were to be my trade now. If I'm going to take this trade, this is what I'm going to do. Target this zone, and you know I'm going to target obviously. I'm going to target my long-term drawn liquidity, which is this zone. This zone will be my long-term drawn liquidity. Okay, this will be my long-term drawn liquidity, and then I'll target it. Okay, so when this is actually happening, there will be a fair value gap here, and eventually market might come to like dangle around this place, show a retracement or reformment. The key is to just leave it open, relax, and then see what the market does, and you can actually take a very good trade out of this. So this is a 6 hour trade. So I would personally know how much I will really bridge and then see how much I would make in this particular trade. All right, so this is type 2. This is type 1, which is bearish to bullish. And if we reverse this trade, if we reverse this chart, it also shows us the downtrend pattern where you can obviously see the uptrend. Then at this point there was a sweep and then a continuation to the downtrend. Okay, so this now signifies or shows us what we need to know about drawn liquidity. Everything we need to know on the concept of drawn liquidity, which starts from the introduction, the importance, the short-term draw and liquidity, the long-term draw and liquidity, and how we can spot draw and liquidity. So if you look at this particular trade now, you obviously can see that it's retracing, but let's stop this video at this point. And remember, please, to like, subscribe, and share to friends that need this concept. Thank you for watching and see you in the next video.